Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a great day. We got a super important update today regarding the macro structure and what coins are doing well in the current sectors here. There's some outliers I wanted to kind of highlight. Obviously, we're going to look at some order block data and some stablecoin dominance, but mainly focusing on liquidation levels and the macro structure here, specifically relevant to the crypto fear and greed index and altcoin season index, which also correlates in a lot of ways with Fibonacci retracement and previous highs and new lows, right? So we're going to talk about that, mainly focusing on the macro structure though, just because it's a weekend and volume is low. That's generally the best practice. Let's take a look. All right, folks, before we jump on in, I just want to quickly ask you, hit the like button, comment below, enable alerts so you're notified on all these videos here, because I do upload 1 to 3 videos per day. They're super relevant in most cases, just because they're more so time sensitive. So heads up on that. And thanks again for just being a phenomenal part of my life. What I want to touch on here is just some quick little categories based on sectors, and just kind of giving some perspective here. I think it's important. I think I like to give better, broader perspectives on certain things. And we can see here that Bitcoin and Ethereum are pretty much the two highest coins here so far today, as far as that's the sectors that are moving. So that's not awesome. It kind of tells us that we're in pretty rough shape there overall with the market. There is some outliers here, of course, with the top 100, XMR, BCH, QNT, Cake, OKB, and BGB are the kind of the top movers here so far today, along with WLFI being the highest, right? Okay, so that's kind of where we're at there. Just kind of giving you some perspective there. Back-end data kind of lets us know we have 83,300, a significantly large amount of order blocks there, letting us know that there's a good chance that 83,000 is the bottom. All right, so that's tentative, of course, but that's based on the low volume over the weekend. Speaking of low volume, essentially not really helping us too much in this current scenario where stablecoin dominance is effectively increasing still to this day. We've seen a significant increase from 8.7% to roughly 11%. That may not seem like a lot, but that is like the total amount of value in the entire market, essentially crypto, letting us know that there's way more people just waiting on the sidelines, not buying right now. Okay, so just let that soak in a little bit, where Bitcoin dominance, ETH dominance, and altcoin market dominance is significantly lower than it should be. So generally speaking, we want to see Bitcoin dominance pull back, but not in this kind of way, right? It's not healthy. All that said, take a look here at liquidation on the back end. Last 24 hours, we can see Bitcoin has had roughly a 1-to-1 ratio for longs and shorts. It's basically establishing its range right now. So when that happens, it's either you're range-bound trading, you're scalping, or you're not trading at all. That's kind of the concept there. So that's why you haven't seen any signals from us here or me in the last 24 hours, just because there's no reason to force a trade. I may even consider waiting the remainder of the weekend just to kind of see how things kind of stabilize, unless there are some significant outliers we're able to identify today. All that said, fear and greed index is still super low. We'll kind of double check and reflect that or reflect on that a little bit here shortly, but I did want to touch on altcoin season index. Just kind of let you know that we are in this fearish type of scenario, right? 1.2 trillion now, where 1.5 was at support level for us previously, right here upwards, up until the beginning of this month. Ever since we lost that level, altcoins have been pretty much bad investments, as we can see, based on the top 100 coins the last 90 days. There's like only 10 coins that are doing better than Bitcoin, or they have less of a loss versus Bitcoin. Most everything else is in the complete doghouse. Or go ahead and insert preferred explicit content now, right? That's kind of what it is. It's there's other words you can use to describe that, more colorful words. Take a look here at the high block capital though, to double check some fear and greed index scenarios here. Once more, when we had super fear in the past here during February through April, that's when Trump took office. Things got really crazy. We came as low as about 74,000. That's probably why a lot of people are talking about 74,000 as a new bottom. I don't really troll social media at all. I don't really kind of look at it much at all, except for just posting my own content. But from what I can see in my community, 74,000 seems to be the current mindset of where we're going to come down and bounce. That's quite possible. I mean, we hit 80,000 just a little bit ago, right? Yesterday, in fact. So all that said, in that case here, we're seeing extreme fear, of course. Generally speaking, this does start to slow down. We should be seeing some selling pressure soon. I know I keep saying that, and that's how things normally do work out. That's why this does feel different. So this is an outlier here, letting us know that we could very well see further downside. So it's best to expect downside. but also important to start dollar cost averaging. I got some decent orders here, some medium-sized order between 80 and 85, and of course we hit that 70K range. I got larger orders, just as I do at 2,500 for Ethereum, right? So just some kind of things to add to your spot bag or considerations there. Take a look here at Bitcoin backend dominance here. Essentially, we're looking at 84,000, 85.5, and 82.5, kind of just that little range of 82.5 to 85.5 as a solid amount of support based on open interest. This last 7 days of open interest, kind of you can see that those little levels there, which implies that 85.3 or 85.5, you round up a little bit, is that local resistance. That's the local high. So taking a long into that, probably not the greatest idea considering we've gotten rejected every single time we've retested our local highs in the past like 2 or 3 weeks. Okay. Why is it any different on a weekend? You shouldn't presume that it's going to change that. Okay. All that said, 15 billion liquidation short delta, just kind of letting us know you don't want to take longs right now. There is a pretty significant liquidation event at 85.6, which is pretty consistent. It's 3.5 billion in liquidation at one range. So the price could very well wake up to that level. I wouldn't be surprised we see that, but I don't think we're going to see some kind of breakout or something amazing this weekend. If we do, it would be completely manipulative, consistent with the majority of the market right now. So not really something you really should consider, wasting money on. You could get lucky, but that's, luck is not really, it doesn't belong in trading. So let's take a look here at the macro structure. Just want to kind of focus on this for the moment and call it a day on the Bitcoin analysis. The important thing here, I think, and we'll identify this with altcoins and or meme coins later, is just the simple concept of macro structure support levels typically have a tendency of either A, being retested or B, holding. Now, obviously, not all of them have. We saw 86,000 was one of those areas here on the daily time frame that was supposed to hold. That so far didn't. So we can presume that'll be similar to resistance. It's also consistent in a lot of ways with 88,000, our macro fib level on this current extension. So our previous low, once more, at about 50,000, upwards to 126. That puts our halfway point at 87, 88,000. Okay, so that's generally construed as the current resistance level for us, based on that being above the price. Below the price, we have some confluence here too as well. With our golden pocket 0.618 fib level, it's a common area of retracement. Nothing you should bank on, of course, but it is an area to, when you're kind of in the blind in this case, you don't really know how far the bottom's going to, where the bottom's going to be, how far down it's going to go. That's when you rely on fib levels in a sense. They just increase your odds. They're certainly not a reason to take a trade. But what I mean by that here is dollar cost averaging into those ranges may be substantial because we do see here previously, this is right where we had our highest fear, right? That's when our fearest was the most. The last time when, once again, Trump took office, kaboom, right? Shook things up and things recovered. We're probably in a very similar circumstance there. I do think we're going to recover in the relative near future, not another month or two. But between now and then, we know that previously 78,000 was that local bottom. That was when fear was the highest. We're also seeing the same exact level of fear, and we're also retesting a similar range. So that leads me to believe 78K is kind of probably be the local bottom here for us. Worst case would be 71.5K, which is our previous resistance shelf there from March of 24 upwards of October of 24, if you remember last year. We're kind of stuck in this descending broadening wedge pattern, and we inevitably broke out with that 3 or 4 month consolidation. Okay, so those are just some areas to focus on. We're not going to really bother with any lower time frame stuff for the moment because I think it's fairly irrelevant with how low a volume we have, how significantly of a correction we saw again yesterday, and just how depleted the market is right now. I wouldn't expect anything amazing today. Even tomorrow, it could happen, sure, but the odds of recovery is pretty low. So I think waiting for this range to establish itself, seeing if it holds, is going to be an important thing to kind of go from there, right? So those are my thoughts on Bitcoin. What are yours? Comment below. All right, folks, let's jump on into Ethereum first. Just kind of double checking some backend data here with the liquidation levels and kind of going from there. We'll get a good little refresh here, make sure we're current, and just kind of once again focusing mainly on kind of the local timeframes here. We're gonna look at the last 7 days for liquidation because that's super relevant in reversal patterns, but also the macro structure so you understand where to dollar cost average of the price were to continue lower. So we do see the local area of open interest here at 2750. Same scenario, that's been pretty consistent here. So that is both a support and resistance level. The longer we consolidate in that range, though, the more likely we are to go higher under the impression Bitcoin doesn't continue to pull back. Once more, that disclaimer has to exist in all times. As you can see, liquidation delta has ran flat ever since we saw that significant manipulative event here yesterday from 86 to 80K. We can see that most altcoins are underperforming the last 24 hours. And of course, we look at liquidation. There's still a big chunk between 2,500 and 2,400. These are late longs essentially that entered the market as soon as the price came down as low as 2,600. So we may not see 2,500, but just know if we do, a little bit of a wick down below that level would make perfect sense to wipe out those late longs. All that being said, quick look here at the macro structure with our local bottom here, roughly about 13, well, let's just say 1400 to 5,000 as a close approximate. We can see we're entering our golden pocket support range. Now that's consistent if you look as well with our macro structure here. This is roughly the last years and a half worth of data. We can see that 2650 roughly, or just 2600 as a round number down as low as 2400. We have a lot of volume there. Okay, so it does emphasize support there. Once more, we're not just using these wonderful Elliott wave patterns or theories. These are specific areas have confluence with volume as well. That increases the odds that this Fibonacci retracement level will, not necessarily that it will happen, but more so that it will bounce or hold that level, right? So keep that in mind. That's kind of where we're at. But from a moving average perspective, larger timeframes, everything looks fairly well bearish. So there's nothing else to really note here on Ethereum. If you're looking for a new exchange or possibly just want to help support the channel, Bitunix has got you covered. We've been partnered with this exchange for over 2 years. It's been our fan favorite for our community. And the reason why is because they take really good care of you. They offer trading reward bonuses as well as a reduction in fees. Best exchange I would recommend at this point. Link down below for more information. So take a look here at Solana, starting with the backend data. Again, just kind of taking some perspective on the lower time frame liquidation ranges and then the macro structure for support. We can see on the right-hand side, 130 to 125 is that current area of open interest. That doesn't tell us a heck of a lot except for the fact that we're kind of in a range, which is perfectly fine. You know, buying 125, selling 130 and the inverse until we shift that dynamic. There's not much else to note. Same thing here as well with liquidation delta ever since we saw that significant manipulative pattern on basically Friday, or Thursday to Friday morning, we can see volumes ran flat, right? So that doesn't help us in any sense there because generally speaking, you want to see that tapering off, which is not. We can also see liquidation, what do you know? 124 and 131, just above and below those areas of open interest, therefore reinforcing the range-bound structure that we're creating. All that said, 3-day time frame, something to kind of note here. This is like kind of just a larger time frame level there. It's also got that sell side liquidity from previous. We can see 105 is that lowest point. So hypothetically, 105 should be the bouncing point for us if things get really bad. Between now and then, though, there is a decent amount of support, more so resistance, but 145 is kind of that general area that we see the most amount of volume. Okay, but between now and then, it's hard to really say where the bottom is going to be here. We could pull up some fib levels, but they're not going to help us too much. And at this point, there's not a significant amount of structure there. So I would say from a liquidation standpoint, 125 to 130 is just kind of that current range for us here for Solana. And that's pretty much the extent of it there. Taking a look here at SUI, quickly to note, this coin is just belly flopping. I've told you numerous times, do not invest in this coin until it bottoms out. 130 is that area of previous liquidation that looks like it has been swept. Let's go ahead and double check that. Looking at SUI on the right-hand side. Quickly to note, oh boy, see, this is sad. When you actually have to zoom way in on open interest, you know you're in trouble. 150 is the upper range, 135 is the local range. So it doesn't really help us a lot. Liquidation delta is actually getting worse versus getting better for most other coins, or sorry, break even for other coins. And then of course, here's that significant macro liquidation. 130 is that previous area, but we've got, now look at this here, late longs now at 125. So folks, using leverage is part of the problem here, right? So if everyone stopped using leverage, this is probably stop happening. There's no reason for it, but it keeps happening because these manipulative patterns exist, and market makers know there's a lot of idiots here at 125 to 120. So no offense if you're at a long right now, don't mean disrespect, but there's literally nothing here on the charts. And you can see here this descending type of pattern here. This is generally going to break down. This is a triangle type of pattern. They effectively break down, not up in most cases, because you're consistently retesting a support with lower hype leading into it. So this is not good. 120 is probably the next target here for SUI. If it doesn't happen, I'd be just fine with being wrong on this one, because even though massively overextended, it's just, you just keep churning the wheels there if you keep trying to throw money at it and see if it sticks. That's just a terrible consideration. Anyways, from a daily time frame, or sorry, 3-day time frame, giving you some perspective here, and this is kind of crazy and nonsensical, but we are now well below our previous low. So 192 should have been the bottom. It wasn't. We're massively overextended with 4 extra 3-day candles. That basically implies that we've been moving for like what, a full week and a half. We're overextended by a week and a half. That is insane. Okay, so it shouldn't be happening, but it is. All the more reason to just average in. I would say, adding to your spot bag is a different story. I've done so between, honestly, 170 and 130. Those are kind of the areas there. I might have to consider adding between 120 and 130 now. But those are just some things to be mindful of. We can see a decent amount of volume at 165. That's just about the price point, but there's no doubt that this is looking pretty terrible for this coin. Okay, so I'm not going to try to zoom in and try to find some kind of hidden bullish convergence. I'm sure some other idiot's going to be doing for you. I'm just telling you straight up, you don't want to invest in this coin specifically with leverage. That's different story. When it comes to spot bags, feel free to consider averaging in. I generally just have small amounts, limit orders every few dollars. So me personally with this one, it's every $5 I'm investing. So, for example, 130, 125, 120, just some key level round numbers there. You might want to be a little safer and go up a little bit higher, maybe every $4, just so you're not using those large round numbers. But I don't really care when things are in a free fall right now. I just kind of carefully, add orders. I don't really think too much about it because you shouldn't be trying to put everything into the bottom. We don't know where the bottom is going to be, right? Easy way to understand it is that no one truly knows. Even the market makers don't. They're all just playing games with each other. Okay, so taking a look at the backend data, we can see here, we can see XRP 190 to 195 is that local area of open interest. It's big chunks here and there. It's really sporadic. This coin's very inconsistent when it comes to buy orders. There's a lot of the order blocks are always kind of funky, but we can see drawing dead here with liquidation delta and just a little bit more liquidation at 188. So there's a pretty significant chunk there. Actually, it's not a little. That's it's about a $500 million to $750 million there. So somebody's going to have a bad day if we see 187. All right. So that's a possibility, but it doesn't necessarily mean it's going to occur. Now, when it comes to the macro structure here, we're right here at our last line of defense. When it comes to the 3-day time frame, we've seen multiple wicks, 1, 2, 3, 4, 5, 6, 7 attempts to break below 190, and we haven't yet. So does that mean we're just going to bounce from here? No, but it does increase the odds of slowing pressure or consolidation in this range, right? Which is good. So this would be an area I'm interested in. I may submit a 190 limit order for XRP. That being said, though, when it comes to that spot potential, you can see, of course, multiple attempts to break that with previous closures that still haven't happened yet. So we're in I wouldn't say we're in good shape right now, but having a significant overextension, our price moving average range percentile is increased here, and all that combined with this support level increases the odds of recovery. But I got to tell you what, folks, the more you test something, more like it is to break, and we're consistently knocking on this door 190. So floodgates could very well open, and a lot of XRP enthusiasts are going to have a really bad day. And I kind of chuckle a little bit because they're typically the lemmings that are following these other influencers that just tell you the same old crap, right? Like, why do you trust somebody that's going to be posting 15 different ways of trying to convince you that this coin is going to be, shoot to the moon someday? You shouldn't have to have that. You should logically be looking at this here and just know this is a bad situation, right? It's a good investment potential if this coin does end up recovering, but it's certainly not going to go to 500 anytime soon, right? All right. Anyways, conversation for today. Thank you again so much for being an awesome part of my life once more. Do me a solid, hit the like button, comment below, and of course, join us over at Bitunix too, folks. These guys are awesome. We got a nice little deposit reward bonus, but most important, you get a discount on trading fees. Use the link below. So it's all there for you. Have a good rest of the day. We'll see you in the next one. Take care.